explain the impact for the region. Plus, Goldman Sachs cuts its oil price forecast, again calling 40 USD in a worst-case scenario, adding pressure on Gulf state budgets. We'll discuss. And a constructive first round of nuclear talks between the United States and Iran this weekend, with both sides agreeing to resume discussions next week. Welcome into the program. Great to have your company over the next hour. We begin with a look at how Asia is trading right here, right now. We see markets moving higher this Monday as the White House issued an exemption for some consumer electronics on tariffs, including smartphones, computers, and semis sourced from supply chains across Asia. As a result, we are seeing green on screen across the region today, with gains being led in Jakarta up by more than 1.5%. Japan's Nikkei 225 stronger by 1.5% as well, and Hong Kong's Hang Seng also around 2.5% stronger. Traders, of course, also assessing the latest Chinese trade data, which shows export growth at a 4-month high, and as a result, the Shanghai comp is better by 0.86%. A check on where oil stands this morning as well. We see both benchmarks climbing around $1 on Friday on news that the US could end Iran's oil exports as part of an effort to bring the Islamic Republic to task on its nuclear program. Right now, we see WTI at 61.27, Brent just sub $65 a barrel, both contracts falling just under 0.5% there. But a very interesting revision from Goldman Sachs, lowering its price forecast on supply concerns, now seeing Brent averaging $63 a barrel and WTI at $59 a barrel for the rest of this year, with a worst-case scenario of Brent at 40 USD in the event of a global economic slowdown or a reversal of OPEC's voluntary cuts. So we're going to be expanding on that for you over the course of this hour. And of course, a lot of trade and tariff-related headlines over the last 3 days. So let's get you across the latest. First, on Friday, China raising its tariff rate on US imports to 125% from 84%. And preemptively adding that if US increases its own rate further, Beijing would ignore it, calling Trump's tariff strategy, quote, a joke. China's exports of rare earths have also reportedly ground to a halt. Earlier in the month, Beijing announced these minerals need special export licenses to be exported, and those licenses could take at least 45 days to be issued. This could halt production in a number of global industries like electronics and defense, for example, as China accounts for around 90% of the world's rare earth production. Meanwhile, the US seems to have exempted certain electronics from the 125% tariffs, from computers to semiconductors, disk drives to panel displays and beyond. But the Trump administration framing this as a temporary exclusion as these exports undergo a national security probe. I spoke to the US Secretary of Energy, Chris Wright, on Friday during his visit to Abu Dhabi. We talked Iran, Russia, shale, OPEC, and tariffs. He told me the administration has a very active dialogue when it comes to tariffs and how they should be structured. He also said the US shale industry would not only survive but thrive despite plunging crude prices. Listen in.
We're just trying to get the other countries of the world to be as welcome to U.S. exports. We want to just flatten out that balance of trade and help grow U.S. exports to those nations. That's agenda number one. I think we're going to see smashing success in that area. That'll take time, though. And agenda number two is reindustrialize America. So many energy-intensive jobs over the last 20 years have been exported out of our country, mostly to China, but other places in Asia. You know, we just made it harder to make things in America, and those jobs left overseas. President Trump is adamant that workers in the heartland of America get job opportunities back. We have huge investments into our country. The economic impact of all this is going to be tremendously positive. The marketplace right now is fearful. Maybe that's the fast drop in oil prices. People think the economic impact of these policies is going to be negative. I'll take the opposite side of that coin. I think it's going to be quite positive.
Talk to me about the impact for U.S. shale as well, particularly under the president's agenda of drill, baby, drill. You're a former shale CEO. Can U.S. shale actually survive 60 or sub-60 US dollar oil?
Oh, boy. In 2015 and 2016, oil prices twice hit $28. And what happened? What did U.S. shale industry do in that time? Innovate, get smarter, drive their costs down. And that's what's happening right now. The industry continues to innovate, continues to get smarter and wiser in deployment of capital. So no, of course, U.S. shale industry is going to survive and thrive. But of course, investment decisions are going to be tailored if prices stay this low for a long period of time. But I'm quite bullish on the U.S. industry, quite bullish.
So what matters more to the administration in this environment? Is it lower oil prices or is it protecting American energy jobs?
These will go hand in hand. There isn't a trade-off here. In the short term, we might see a stop in the increase in investment in U.S. energy. We may see more investment go into energy infrastructure. We have tremendous natural gas reserves in the United States. The people that live in New England don't have access to them, right? Because New York stopped them from building a pipeline. It's got to come by ship. It's expensive. We're going to build infrastructure to connect our states together. We're going to build infrastructure as new industries locate in the United States. So you may see a little shift towards infrastructure investment. What do these infrastructure do's? It enables businesses to grow, new jobs to be created, and increased demand for energy.
So tell me this, who actually has the president's ear on tariffs right now?
The president is very keen in getting opinions from across the board. I think it's one of his great strengths. He has strong opinions, but he's not everyone just agree with me. He wants to hear that disagreement. So we have very active dialogues within the administration about tariffs, about the way they should be structured, about how they should be implemented. So it's a continual dialogue. And of course, he takes feedback from business leaders, from world leaders overseas. He's a negotiator. He is a master negotiator. And you're seeing that happen right now.
Chris, right there. This was a first on CNBC interview. So many headlines coming out of this. And to read more about that interview and check in on what he said around OPEC, just head over to cnbc.com. We're also going to be bringing you more of that conversation later on in the show. But let's continue our focus on trade and the impact across the Middle East. Carlos Garcia is here. He's partner of Middle East Customs and International Trade at PwC, joining me live from Dubai. Carlos, welcome to the program. It's great to see you. First of all, just taking a step back here and looking at all of the trade and tariff headlines we've seen over the last 2 weeks or so. What impact do you think the latest US-China tariffs are going to have on trade flows through the Middle East specifically?
Hi, good morning. Thank you for having me. It's a pleasure. So yeah, we've seen a major shock to the existing world trade system. So we will see probably a reconfiguration of global supply chains, more regional supply chains, and also looking countries into expanding their trade base of trade partners to make sure they can diversify and not rely only on one bloc or the other. If we come down to the Middle East, I think it is very clear that there is a direct impact of Middle East exporters and Middle East producers who are now facing the additional tariffs for their goods coming into the US. It's true that with the 90-day pause on tariffs that go beyond the baseline of 10%, most countries are now at the same level of tariffs, but there are some sectors that are critical for the Middle East, for example, aluminium, steel to a certain extent. The UAE, Bahrain, other Gulf countries are major exporters of aluminium to the US and are facing a 25% tariff around those products. Also 25% on automotive, both automobiles and auto parts. So there are a number of sectors where the major exports from the Middle East are being impacted. But it's not only the outbound shipments. I think there's also an important element of cost of procuring in the Middle East is going to increase. Not only for US made goods, but also goods made somewhere else that rely on US components, or even those goods that not relying that much in US components are going to still face the cost that is going to pass along the supply chain from the US tariffs. It's important to remember that the free trade agreements that are in place with the US, for example, Oman, Bahrain, Jordan have free trade agreements, the QIZ regime in Egypt, those are on hold now. So no preferential treatment are being granted to generally exports that were granted to 0% customs duty. So there's a lot of impact on Middle East exporters. There are a good number of Middle East businesses operating assets in the US. That operation, that manufacturing in the US is going to become a bit more expensive as well. So generally, significant impact for the Middle East, other than other regions as well. But it's also important to bear in mind that there might be, in the short term, a potential increase of influx of imports in the Middle East for goods that were originally bound to the U.S., and we will see some of the local producers in certain industries struggling with that potential increase of imports into the Middle East. So that's broadly a snapshot on where the Middle East stands from that perspective, Dan.
Indeed, and it's so fascinating to see global trade flows being essentially reorganized in real time. Carlos, you spoke briefly about how companies are responding, but expand on that for me. What are we seeing businesses actually do here in the region to adjust their supply chains in response to these shifting global trade dynamics?
Yeah, so look, the situation is still quite volatile. So we are urging our clients to act with caution, but at the same time being proactive in keeping up with the pace of changes and also preparing themselves. So what we are seeing currently in the market, especially major multinational and regional groups with exposure to the US, is they are gathering their trade data. They are running their trade data with leveraging technology and making sure they understand the financial impact of the potential tariffs, whether they stand at 10% as they currently stand, or running different scenarios, right? So I think once you understand your potential exposure, what we are seeing companies do is preparing a mitigation plan that, given the situation is still quite volatile, would include short and medium and long-term measures, right? So if you look at the U.S. customs legislation, there are still some reliefs and exemptions that can be utilized. Look at, for example, the use of free trade zones, duty drawback, which is a customs duty refund system for re-exports in the U.S. So that's a major thing to look at. And you can also look into lowering the values of your products to the U.S. By leveraging transfer pricing, quick wins methodologies, and also looking at HS classification, and more importantly, to try to benefit from the list of exclusions of goods. I think a lot of people is forgetting that, the executive order that was issued on the 2nd of April by President Trump has a very long list of excluded goods, including energy goods, sensitive and rare minerals, chemicals, polymers, and a lot of components that are manufactured in the Middle East and exported to the US. Those, as we stand, are exempted, right? So there's a quick exercise is looking at that exemption list and see whether you can fall under those premises, right? The more medium to long-term strategies obviously would include revisiting your global tax strategy to optimize cost, and also more in the long term. And again, because the situation is very volatile, we are not seeing companies as to actioning that now, but obviously considering changing sourcing strategies, manufacturing locations, to try to comply with the rules of origin and get to the US on the lower end of the tariff. So those are some of the measures we are looking at, and obviously, people looking at contractual agreements, who pays what in the supply chain, and trying to sort of as well scratch some money from those elements to make those quick wins, more realizable. So that's in a nutshell what we are seeing there.
Indeed, and it's been so interesting to watch as well, just given all of the headlines around the tariff space right now. Carlos, let's double click on the strategy that we're seeing out of the White House as well. A lot of criticism being leveled towards the Trump administration on not just the back of the napkin mathematics here, but also the messaging around these tariffs. Of course, politics is about creating a problem that policy can solve. Trump has effectively done this in the past, but the messaging on tariffs has really been impacting the market, as we have seen over the last couple of weeks. The latest, of course, being the exemptions on mobile phones, on some chip supply chains, on computers as well, these electronics and consumer goods. What's behind the tactical carve-out of this sector, and is this designed to serve the interests of the United States, or are there other factors at play?
Well, I think, as we've seen in the last couple of months, there are a number of decisions being taken by the U.S. administration. Some of those have been reversed or have been paused, like the last time 90 days, I think, to capture some of the negotiations that the trade partners might be trying to undertake with the U.S. administration. But I think from a Middle East perspective, and I think more specifically from a Gulf region perspective, there's also an opportunity to leverage this, major volatility in the global trade system, and capitalize on the investments that the Gulf countries have been making in the past few years to diversify from the oil economy, investing in infrastructure, industrial cities and special economic zones in Saudi, for instance. The UAE has continued to become very bullish about the international trade agenda, conducting a lot of free trade agreements with different partners. Only last week, it was announced that they were starting talks of a free trade agreement with the EU. So I think being in the Middle East and more in particular in the Gulf countries, I think there's an opportunity to, one, strengthen regional cooperation. I think we have two major economic blocs in the Middle East, the GCC Customs Union or Economic Agreement and the Arab League. Those regimes, in my personal view, after having worked in the Middle East for quite some time now, require some additional integration to basically promote inter-regional trade. That's one important thing to consider. And also looking at other countries like, for example, Oman investing as well in diversifying the role of the free zones and making sure that all these investments in the last few years capitalize now. We've seen some influx of multinational companies requesting and showing interest on having the Gulf as an alternative trade hub or manufacturing hub, given what's happening in the region and given that other traditional alternative options are in the list that the U.S. administration published beyond 10%. So I think the Gulf is well positioned to leverage that and capitalize on those investments I was mentioning before.
Okay, Carlos, really fascinating insights. I really appreciate your time. Thanks so much for coming on today. That is Carlos Garcia there from PwC, live with us in Dubai this morning. And just some news crossing the wires this morning. KKR has appointed General David Petraeus as the chairman of the Middle East and will establish a dedicated investment team in the region led by Julian Barrett, a managing director at KKR. General Petraeus, currently chairman of the KKR Global Institute, was the CIA director and former commander of U.S. Central Command. He'll remain in his role as chairman of the institute. KKR has been active in the region since 2009 with local offices in the UAE and Saudi Arabia. And as we head into a break, also want to show you what's happening with spot gold right now as well, hitting another record high of $3,245 an ounce just a couple of hours ago. It's now up around 23% year to date. Just last Friday, Goldman Sachs also updating its projection on gold prices, expecting gold to end the year at $3,700 per ounce due to strong central bank demand and some concerns around recession risks. For more market news and views, access Middle East. We'll be right back. Stay with us.
Journalism was always the perfect career for me. I've always been an egghead and a nerd. When I'm covering tech, my job is to really take these wonky and complicated topics and distill them down so anyone can understand. Ambition definitely fuels the tech industry. There's still this air of possibility when a new tech product comes out, that it can do anything, that can change the world. There's nothing better than breaking news, jumping on camera and telling everyone immediately what they need to know. I love what I do. No day is the same. I couldn't imagine doing anything else.
The day's top stories driving Wall Street, up-to-the-minute developments, instant analysis, essential business news. At the intersections of power and money, Brian Sullivan joins Kelly Evans. Power Lunch, CNBC.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Welcome back. Here are some other stories on our radar this morning. First, an Israeli airstrike on Sunday struck a major Gaza hospital, damaging key parts of the facility, including the emergency department. Witnesses reported seeing flames and thick smoke pouring from the site, with video footage capturing the aftermath of the strike. Gaza's civil emergency services said no casualties have been reported. The Israeli Defense Forces claimed the strike was targeted at a Hamas command center, allegedly operating inside the hospital. 2 Russian ballistic missiles hit the Ukrainian city of Sumy on Sunday, killing dozens of people and injuring more than 100. It was the deadliest strike Ukraine has seen this year. President Zelensky asked for a tough international response to Russia following the attack, calling the move, quote, deranged. The attack comes soon after U.S. envoy Steve Witkoff held talks with President Putin in Moscow as the Trump administration continues to push for a ceasefire. And McLaren's Oscar Piastri finishing his 50th race of his F1 career in style, nabbing first place in the Formula One Bahrain Grand Prix yesterday. It puts the Australian driver in second place overall, just 3 points behind his teammate Lando Norris. Moving on, and Iran and the United States held a, quote, constructive first round of nuclear talks in Oman this weekend and agreed to meet again next week, reportedly on Saturday in Rome, according to Axios. It's the highest level meeting between the two countries since 2018, with Iran's foreign minister and the U.S. envoy Steve Witkoff leading the talks. President Donald Trump pulled the U.S. out of the nuclear deal with Iran in 2018, vowing to make a, quote, better deal. More from my interview with the U.S. Energy Secretary Chris Wright. I asked the Secretary about America's relationship with the region today. He said the biggest bump in the road with the GCC has been the rise of Iran. Listen in.
President Trump's broader agenda is increased energy production. He understands energy is not a sector of the economy, it's the sector of the economy that powers everything else. He wants more energy and therefore lower energy prices, makes life easier for Americans, easier to pay their bills, better for businesses to invest and expand their businesses. And who are our key partners in the energy world? Well, visiting 3 major producers in the Gulf that have not only been great energy partnerships with the United States in UAE, Saudi Arabia, and Qatar, but they've also been strategic allies of the United States, and they've been investing partners of the United States. We're, as you know, Dan, we're on the edge of a huge new boom, a new energy-intensive industry called artificial intelligence. We're going to have tremendous investments from our Gulf partners into the United States to build the simply massive infrastructure that's going to be critical to harvest the gains that can come from artificial intelligence. I mean, the demand for intelligence is unlimited.
And what's extraordinary right now is the fact that we've already seen this $1 trillion investment corridor being opened up between the UAE and the United States over the next 10 years. But talk to me about the relationship as it stands today as well, because it's also fair to say that this is a reset of sorts as you lay the groundwork for President Trump's visit to the region. Is that an accurate description?
Yeah, I think the partnership with the U.S. and the UAE, where we sit today, has been long-standing. But has it had some bumps on the road? I think absolutely. Look, the biggest bump on the road, I would say, for most of the Middle Eastern relationships has been the rise of Iran during the previous administration. President Trump's first term, he had tough sanctions on Iran, really plummeted their oil exports, made Iran in a tougher situation economically, which meant they could create less trouble abroad. The Biden administration came in and thought they could appease Iran and just appeal to their better nature. The Iranian people can tell you that's a losing strategy. This is not a government concerned about the well-being of its people or the better nature of its allies or foes abroad. So President Trump wants to reverse that trend. A stronger Iran has caused trouble by supporting Hamas and Hezbollah and the Houthis, the rapid race towards a nuclear weapon. Think of the impact of a nuclear-powered Iran here in the Middle East. This is just a daunting prospect for anyone who lives in this region or in the world as abroad. President Trump's policies have been very simple. We cannot and will not tolerate a nuclear-armed Iran. And we will do whatever is necessary to achieve that end. And of course, it'll start with economic sanctions that'll be very harsh and very severe with a dialogue to Iran. We can end all this We need to dismantle the Iranian nuclear weapons program, and that's what's going to happen. Exactly how it's going to happen, we don't know that yet. But I think there's strong support in this region that that's for the best of the region. Frankly, that's for the best of Iranian people. The only losers from that, or potential losers from that, is the Iranian regime.
Meanwhile, Egypt's President Abdel Fattah el-Sisi is on a golf tour and arrived in Doha on Sunday, greeted by Qatar's Emir. The visit is part of a broader golf tour which includes Kuwait and is aimed at strengthening Egypt's relations with Gulf countries. Egypt and Qatar have both played key roles in mediation between Israel and Palestinian factions during the war in Gaza. Sisi is hoping to restart diplomatic efforts to stabilize the situation after the breakdown of that fragile ceasefire. Meanwhile, Syria's President Ahmed al-Shara paid a visit to the UAE on Sunday, his second official visit to a Gulf state and his first to the Emirates as the new ruler seeks to reassure foreign partners. Al-Shara met with UAE President Mohammed bin Zayed and was accompanied by Foreign Minister Assad al-Shabani. Al-Shara also visited Saudi Arabia in February on his first foreign trip after assuming the presidency in January. He's hoping to rebuild Syria, which is in desperate need of sanctions relief to revive its economy after 14 years of war. And we're still watching moves in the currency space today as the dollar index continues to pull back. You can see here dollar index looking like this right now. In terms of where we stand, well, dollar index at 99.62, now below that key psychological 100 level. And of course, the FX landscape also on the move as a result. Stay with us, more market news when we come back. You're watching Access Middle East.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing